What's going on? What's going on? Welcome back. Welcome back to another episode of Take Profit Tuesdays with your host, Levon Stewart. And as always, guys, as we always like to start each and every single video, as much as you guys hate to hear it, but I love to explain it. Again, this video is not financial advice. This video is not for those who are not faceted in the four pillars of psychology, capital, risk management, and strategy. If you're willing, please seek a licensed financial advisor, a licensed broker, where they will manage your money in a professional manner. They also charge interest. Well, they also charge fees, commissions, to help manage your funds to make it more profitable. And again, guys, the market is very volatile. You cannot really predict it. But on this channel, we teach you how to get the basics, get your foot wet. As always, at Vonnie FX, we do offer the three programs, as in the trading service, give you the trading alert. We also provide the crypto fund management. We also provide teaching. So if any one of you, your friends, family, or if it's just someone who's just wants to get interested into the markets, you could send me a message directly, throw it in the comments, and then we could get something situated, schedule some time, and help you get yourself more faceted with these markets. So I know there may be a point in time where these videos will not be mostly viewed on you know times as of right now. They're right now they're probably going to be viewed when the market's up, and that's perfectly fine. And the reason why that's perfectly fine, because I want future investors, traders, to be aware of times like this could happen again. I had this conversation with this one fella, and he said the market kind of moves in a pendulum, where it kind of swings up, kind of swings down. I see it as like waves, like surfing waves. It goes up and then crash. Then you get the next wave. It goes up and then crash. It repeats itself. So again, even though now times are looking kind of bad, it's a good time to start saving. It's a good time to start investing while things are cheap. And it's also good to put yourself in a nice position to get that education. So with that being said, as always we like to say, the education we provide is a lifetime of success. The goal is to educate the masses, to increase their financial literacy, and to make better life decisions, and to resulting to better quality of life. So this is gonna be a quick and short stream. I'm just gonna go over briefly about what happened last week, and to be honest, not really much happened. As we talked about like 2 or 3 episodes ago, we thought at this point right here, kind of like a retest recovery. Market took another dip. We go on to another buy. Right now, I could safely say it's still kind of consolidating within this range right here, as we see. Let me circle it so you guys get a better idea of what I'm talking about. Yeah, that right there. So this is like a little consolidation. It may drop a little bit lower to this zone again. Not 100% sure, but and nonetheless, one thing I'm definitely gonna do right now, I'm gonna start putting my money aside to get into another buy. As far as if it may dip lower, if not, then I'm gonna just keep on accumulating funds. To maybe not only just put $25, being put 50, 100, 200, what have you. But let's not get that mistaken as to what I'm doing to what you should be doing. What you should be doing is not only joining at the same time as I'm joining, as that I see fit on these dips, but you should also get into times where I miss these dips, like such as this one right here, right at the very bottom, and maybe another one coming in that I might miss as well. These are the perfect times, because again, guys, like we said, the group account we're doing, it's a team effort. It's a team effort, and we want all of us to also succeed in this team effort, right? And the ultimate goal is to eventually have all these funds with the profits, earnings. Obviously, we're gonna pay our taxes, right? And to turn to a options account, where we could trade with more money, with more power, with more different strategies, and just have fun with it, and make some money while we're having fun, right, guys? Because again, we stand by the four pillars, and that's what we kind of reside on. All right, so real quick, I just want to talk about DXY as far as the inflation is going. Um, Not too well, my friend. So the Feds now, I hear there's supposed to be a meeting this week. Not 100% sure. But it's. We thought at this point right here it was coming down. It's gonna continue to go down. Unfortunately, that's not the matter. But nonetheless, we kind of let's see the bigger perspective. Yeah, this dollar is extremely overbought. It's also passing RSI as well. So the Fed's got a lot of work to do as far as bringing this down, and this may have also impact with the oil that we're trying to accumulate. And from what we hear, I also heard oil dropped by 8% today, crude oil, which is good, which is definitely good. But yet we're still in that consolidation zone. My opinion, we need to really break this neckline right here to possibly see some nominal pricing as far as us the bottom line. And then like I said, guys, it's gonna be a short stream. Just want to talk about a couple things. Um, if you're just not joining in, make sure you like the video. Make sure you throw something in the comments, subscribe. Yeah, leave a like. And let's see about I do want to talk about one trade we did this week, which was pretty successful. Yeah, we had a winner and loser actually this week. So on just explain to it. So again, this is like our zones. Me thinking that it was at a very bottom. It was kind of oversold. I thought it was gonna react to it in a positive manner to the zone. It did not. It failed. So as any trader would, if it broke the support, it's gonna be resistance. And this is what we kind of teach in the textbook, guys, with the classes. So this is exactly the reason why you should join the classes and book a session with us so we could teach how this goes down. And what it does is once it breaks that zone, it acts as a resistance, just like how right here it's kind of the resistance, right? And as it goes down and down, it break, retest what we teach textbook, and it continues to go down. So as far as how I set my profit to, stop loss, that's a secret. That's something you gotta get taught in a group. Um, and yeah, that's pretty much it. And this was a swing trade, but it closed down within, I guess, within the day. Which is good in my opinion. I was actually gonna hold for a couple more days, but hey, you win some, you lose some. And yeah. So like I always tell my group and team, we always risk 1%. So it's always good to get a winner after a couple losses because it kind of fix back what you kind of lost. So it's a good sign. And let's just talk about the S&P. What's going on with the S&P? Hold on, this is actually the wrong article. Give me 1 second. I'm gonna put you guys on the screen. Let me pull up the right article. That is my mistake, guys. This is top tier streaming service, guys. Top tier. But anyways, yeah, tell me what you guys are thinking. What might happen in the upcoming future. As far as like the Feds and what you guys may think that may happen. All right, so this was actually the right article, and I just want to highlight a couple of things. Maybe talk about a couple pointers, talk about more detail. So again, shout out to the author, Echo Wang, and he writes, the S&P ends slightly higher on Tuesday as investors kept their focus on growth trajectory of the U.S. economy, and the tech-heavy Nasdaq closed with higher than the Dow slipped, which is kind of good in the sense of which different sectors these both indexes are. The U.S. stocks have been under relentless selling pressure this year, indeed, with the benchmark S&P index recording its steepest first half percentage drop since 1970, as the Federal Reserve moves away from easy money policy by raising borrowing costs. So the easy money policy is PPP loans, the stimulus program. That's easy money. Now they're trying to get that money back from the market, try to bring that inflation down. Investors are waiting for minutes from the Fed's meetings in June and on Wednesday as they embrace for another 75 basis rate hike at the end of the month. So again, guys, the Feds, they said they're going to aggressively increase the rates. They've been doing it such, but let's be honest, has it been effectively doing its job? We pulled up the charts, and have you guys seen gas prices gone down? Have you guys seen prices of goods and services gone down? I don't think so. If so, tell me where you live, and then we're gonna fly out there and have a nice life. So he continues by saying traders are also keeping watch on economic data, including June non-farm payroll reports expected on Friday, and the company commemorates up for signs of peaking inflation and cooling economic growth, with another earnings season around the corner. So that's could be a good sign. And most of the sense, if things are coming out good, and then of course mean not so good of things, depending on how things play out, right? So then, just again, guys, I want to keep this so short, pretty squeaky clean stream. To hit a couple points, and yeah, we're gonna wrap this up in a second. So data showed new orders for the U.S. manufactured goods increased more than expected, reflecting that demand products remain strong even as Fed seek to cool the economy, which makes complete sense as to why the dollar is increasing in value. Separately, business growth across the Eurozone slowed further in June, and European natural gas prices surged again, reigniting worries for a recession in the bloc. So that's kind of like a little foresight as far as what's going on. But yeah, just to end things off, guys. Like you really have to be in omniscient point of view with these kinds of things. Really have a non-bias, not really a lot of emotions attached to these kinds of things. And times like this, you really want to really, you know, like I said before, buy now, hold on for the winter, whatever. So if you're a smart person, you probably won't. Well, let's not say smart. If you're a savvy investor now, you would take the money aside, wait till it's perfect time to buy it, kind of like around right now. If it dips lower, put a little bit more money to the side and hold it off. Make it a nest egg. Or you can find other ways to, increase your revenue. Or you could start paying off debt more faster before interest, rates go up. Or you could just not even bother with a loan at this point in time as far as lending goes. Because, again, we talked about how the feds are trying to decrease rates. If you're someone who's participating in these markets as far as being a homeowner on a loan with a mortgage and lending as far as, whether it be a car, house, or what have you, or personal loans, the rates are going to continue to increase because the feds are increasing rates for the banks. So the banks have to also make their profit as well, like we talked about before. So they're going to also increase their rates as well to make the difference. So with that being said, guys, be careful. And as always, if you're enjoying the stream, like it, comment, subscribe, and throw your comments in. And if there's anything else, peace.